Oh, the internet's so funny. Oh, I gotta add a position here. All right, 12 o'clock here. We're going to wait about 15 more seconds or so before we get started. Let a couple people pile in. All right. Let's do it. It is Tuesday, February 2nd. Can't believe we're in February already. Seems like 2020 just ended at 12 o'clock Eastern Time. Today is time for my weekly update. I know some of you guys have been following every week for a long time. I am pumped today, and I'm going to tell you why in just a little bit. First, we got to go through disclosures. I'm an associated member of T3 Trading Group, which is an SEC-registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, at the time of this recording, I am in, 22, 23 positions, something like that. Mainly sitting here alongside in a lot of these names. UVXI is really more of a hedge on the market at this point that I got into, at the end of last week. I will talk about these positions. I will talk about markets here in a second. I think people know my background by this point. Senior trader and registered principal at T3 Trading Group. Been with T3 for a decade plus. I've mentored well over 100 professional traders for the company, managing a group in excess of 50. Big skier. Last weekend, Pow Day here in Wyoming, Idaho. Grand Targhee, I'm skiing powder waist deep on Saturday in the middle of a snowstorm. We got like 5 inches while I was even at the mountain. And then Sunday was a bluebird day. Last weekend was all time. Also, big martial artist. That's my background. Here is my email address. On these webinars, I talk about markets, right? I give my perspective on a week-to-week basis. And in addition to that, I always try to throw in some lessons as well, so that everyone who watches the webinar on a week-to-week basis can actually become a better trader by doing this. And then I typically talk a little bit about T3. So I talk about T3, the account options that we have, proprietary trading accounts, retail trading accounts. So I'm going to be doing the same thing today as I normally do, but we got a little bit more to talk about today with what T3 offers from an account perspective, because every day across my news wires in the virtual trading floor room that I run, every morning I'm seeing the same headlines hit. Schwab is down, Fidelity is down, E-Trade is down, Robinhood is restricting trading, all this stuff. And at T3, we are having zero problems. So I need to talk about that a little bit today. First, let's go to the charts, because this market and what some of these stocks have been doing, it is just absolutely incredible. The SPYs here right now are at 383. Yesterday, before the equity market officially opened at 9:30, futures market hours, we were as low as 365 in the SPY, the equivalent of 365, S&P version of SPY 365. Since yesterday, so in the last, 30 hours or so, we have basically gone from 365 in the SPYs to 383. That is a huge move. It's a huge move. It's honestly more than I thought. I thought that the SPYs were going to have a lot of difficulty in that 380 area today, and they opened up basically at it. 380 was the pre-market high. We blew through it right at the open, and we have just been having an incredibly bullish day today as we kind of continue to grind higher. Risk is back on for the market, at least for the moment. I am expecting that we're going to get some sort of pullback today, some sort of 15-minute correction, a pullback to somewhere between 380 and 382. But so far, this market has not been able to tick lower at all. Last webinar was this day, right? I guess the S&P made an intraday all-time high that day, but I spent most of my time talking about Monday. And when I spoke about last Monday, let's go to a 15-minute chart of a week ago Monday. Let's find it on here. This is it right here. This looks like a blip in the radar, right? Let's do a little zoom in here on my trading software, Sterling LST. So let's just look at this 15-minute chart here. And what I spoke about on this day was really this very fast sell-off that we had. This sell-off started the second that GME hit its high the day that day. What this was, what we spoke about last week, last Tuesday, was that this was hedge fund de-risking. And I remember saying the thing that I was most surprised about on Monday was how well we closed. We had this very heavy intraday sell-off last Monday that was followed by a really strong rally. To me, this was a warning sign. Something was going on here with the hedge funds. The hedge funds on that day, this is when GME had its top at 159. Obviously, since then, pre-market, I think, put in a high of $512 one day. But that day was a warning sign. The GME topped out and the SPY sold off at the exact same time, and it was just de-risking from the hedge funds. I took that as a warning sign. I sized down on some of my positions into that day. Just across the board. I sized down on some of my shorts. I sized down on some of my longs. Market was making me a little bit nervous. I was worried that the big multi-billion-dollar hedge fund losses that we were seeing come in from all these hedge funds as a result of the Wall Street Bets community on Reddit was going to force them to take losses elsewhere. Think about it logically. You're taking losses in a position. This could be you as an individual person, or this could be a multi-billion-dollar hedge fund. It operates the same way. You have a position that you are losing a lot of money in. At a certain point, you're going to be squeezed out of that position, if it's GameStop short or whatever. And then at a certain point, you may need to actually sell some of the long positions that you have on or other positions that you have on. You may need to liquidate those, even if you don't want to, just because you need to raise cash for yourself because of the big loss that you just took. Well, that is exactly what happened here with the hedge funds. And to my surprise, Monday of this week, GameStop was up. It was up even more. Sorry, that was Wednesday of last week. We continued to go up even more. So this was Tuesday when we did the last webinar. This was Wednesday. We had that massive gap up and just the continuation in this thing, absolutely insane. And my thought process on, going back to the SPYs, on Wednesday of last week, Wednesday morning, we gapped down. Technically, we were still in a bull trend. It's very hard to call a sell-off in a bull trend, but with an understanding of the dynamics of hedge fund positioning, plus the gap down on this day with GameStop, what is this? This is the 27th? Where is GameStop on the 27th? Can't even find it on my daily chart. Let's go to 15-minute. GameStop on the 27th. That's the day GameStop gapped up to 355. So I got GameStop gapping up from 150 basically to 355. At the same time, I've got the SPYs, the S&P, gapping down from SPY 384 down to SPY 380. Again, still within the confines of an uptrend. On a normal day, in a normal situation, I'd be telling everybody on my team, everybody who's a member of the virtual trading floor that I run, which is called the Pro Desk, we should be buying the gap down. Not on this day. This day, I was screaming from the rooftops to be shorting, and this is when I loaded up in UVXY pre-market this day. I think my price was like 11 quarter or so here in this UVXY, and I had a tremendous rip in this UVXY, which subsequently happened. I still have some of that position, but obviously I sold a lot into this few-day move. Now to go back to the SPYs here, right? So that's this sell-off. So first of all, this day here, which was the warning sign I spoke about last Tuesday, was a day to take notice of for potential de-risking. So I'm de-risking myself. And it's just another general rule. There's another thing I've been emphasizing to my team. When volatility increases, you will be able to make and lose more with less. What does that mean? It means on a normal day, if I have 1,000 shares of a stock, I could make X amount of money or lose X amount of money. When volatility increases, if I have that same 1,000 shares, then I can potentially, the numbers increase, right? I can make even more or I can make even less. What's going on there, Michael? I can make even more or even less. So generally when you're seeing volatility increase and you have a certain amount of money that you try to make per day as a trader, maybe you're $1,000 a day trader, you can deploy less capital to make and or lose the same amount of money. So seeing this warning sign on this day, that was a sign for me to actually size down, which I did. My P&L swings have not gone down. You know, the same 5 figures up or 5 figures down that I often end on a typical trading session, those numbers have actually stayed the same with me deploying probably a third. So we caught this big sell-off, followed by kind of an interesting rest day, followed by a further sell-off on this day, right? And we had Facebook, Apple, Tesla come out with earnings. The market, even though honestly the earnings numbers really weren't that bad for many of those companies, the market didn't like them, right? We can take a quick look here at Apple. They sold Apple off on its earnings report. We can take a look at Tesla. This is the Tesla day right here, right? They sold Tesla on its earnings report. It's since recovered very nicely. Facebook, they sold Facebook off on its earnings report as well. So we just got further downside. This is here now. So now this is Friday, right? Telling my team about 370 support. After hours when Apple reported, we went down to 370 in the SPYs. The next morning on this day, we were at 370 on the SPYs. And then on the sell-off day, we closed on Friday at exactly 370. I spoke to someone on the phone after market hours on Friday, and I was like, I think that if we can get a fast sell-off to 365, that's the next level of support after 370, 360, 365 right here. It'd be a big sell-off in just 4 or 5 trading sessions. That is where I would want to come in and start, buying and sizing up on the long side again a little bit with both hands. And unfortunately, they made that so difficult. They made it so difficult because 365 did get touched, but it happened in the middle of the night, Monday morning. You know, if you have a futures trading account, which T3 has futures trading accounts, I don't personally trade futures. Our equity trading hours are 4 a.m. to 8 p.m. 4 a.m. to 8 p.m. tends to be enough for me, but unfortunately not on this day. We hit that 365 that I was talking about in the middle of the night, Monday morning. By the time the market opened for us yesterday, the market opened positive. Made it really hard to bite into that opportunity. And you know what? The market does that sometimes. And you can't be upset about it. You can't necessarily chase. You can only do the right thing for the market with where it is at any given point in time. And that opened a little bit difficult. Today's open, honestly, even more difficult. Because, you know, do I buy 380? I know 380 is really important. What I've been telling my team, so the way that I approach my team's morning meeting on a day-to-day basis, happy to answer your question on the Qs in a second. I can actually do that right now. The way that I handle my team's morning meeting on a day-to-day basis is I start from the big picture down to the small picture. And this is where we get probability from. Probability, even if you're just a day trader, even if you trade off a 5-minute chart or a 15-minute chart. Personally, I both day and swing trade. But if you are trying to have an understanding of probability on any of the trades that you take, you come from the big picture to the small picture. So that means any stock that you're looking at, having a solid understanding of the daily chart of that stock. If you are looking, and then also understanding the indices, because the correlation between individual stocks and the market as a whole is very high. So everything I do, it starts with an understanding of the SPY, the Qs, and the IWM. Then I go to those individual stocks. What is the daily chart telling me on the individual stocks? After I've done that, then I can go to the 5-minute chart. And again, this is where the probability comes from. If the market's looking like higher, if I am looking at stocks on a small time frame, if the SPY is hitting 365, which is my buy point on the SPYs, I'm going to have a much higher probability buying that small time frame on that stock, right? So it's a big picture down into the small picture. And one of the ways that I'm trying to view the markets is basically markets can be in one of 3 categories at all times. They're bullish, they're neutral, or they're bearish. And then we have continuity across indices. So for example, if the SPYs, Qs, and IWM are all looking bullish, those are the 3 major indices I look at. I don't really look at the Dow that much because it's only composed of 30 companies. If the SPY, Qs, and the IWM are all pointing to the bullish side of the market, well, I'm telling my team every morning, guys, you know what? We got to err on the side of the longs. But maybe I'm looking at a different time frame where the Qs are more neutral, the IWM is bearish, the SPYs are bullish. I have different messages depending upon the specifics of which indice that I'm looking at. Well, I don't have the same level of probability on that side of the trade. So that's kind of the thought process there. So I've been looking at these indices and I've been saying to the team, all right, when we broke below, the market didn't become bearish. It just became neutral from bullish, right? Every day for the last several months, every morning meeting, I'm telling my team the same thing. The message got old after a little while, but you know what? It was the message of the market, not my message. I'm just trying to translate it. I'm telling everyone we got to err on the side of the longs. Err on the side of the longs, err on the side of the longs, we're grinding higher. You look at the Qs, err on the side of the longs, we're grinding higher. You look at the IWM, IWM broke out in November, have had an even more accelerated uptrend. Lean to the side of the longs, lean to the side of the longs. Where are the key levels where these markets can go from bullish to neutral? For me, for the SPYs, it was 380. We had this upper flag here, right? We got a little bit extended in the beginning of January. We had a time and price correction for about 6 trading sessions here, and then we broke out above 380 and then started to flag up here again. We had this anomaly type trading day, which I'm describing as a warning day because of what happened with GameStop and hedge fund de-risking. That then led to us gapping below 380. When we got below 380, when we got below this pivot point here, we're not in a downtrend. It's not a pattern of lower highs and lower lows, but we're below this key level that brings the market back to neutral. Looking at the Qs, that same level was 320, right? 320 was resistance. We broke out above 320 on this day here on January 20th. Everything is normal. Lean to the side of the longs, error to the side of the longs. Okay, here's a day to take notice of. We closed just about right at 320 that day. Guess what? Next day we're above it, but this candle, if you understand candlestick analysis itself, this candle is a little bit nerve-wracking, and then bam, this day here we break below. We go from bullish to neutral, but then literally the next day, the NASDAQ showed great strength and got us back above 320 to be back to bullish. IWM, 205 was my line in the sand, right? 200 bucks was a breakout level. We broke out through 200 here in the beginning of January. We made a bull flag pattern here with 205 as support. The ADMA on the daily chart caught up to the base of the bull flag. That's usually when continuation occurs. Continuation occurred, no surprise. And then we got a deeper pullback. But that pullback was just back to that 205 previous support. So the IWM, in my opinion, never even really went to neutral territory. It stayed in bullish territory. So now, a couple trading sessions ago, what I'm saying to the team is my SPYs have become neutral to 80. My Qs are bullish because they're above 320. And my IWM is bullish because it's above 205. So I don't have the same level of probability to the long side when I have one market that's neutral and two markets that are bullish, as opposed to if I have all three markets that are bullish. Now, what's most likely going to win? Well, most likely it's going to be the bulls that win, but the SPYs here are still showing me a little bit of a warning sign. And now guess what? SPYs are back above 380. The market movements here have really widened. The volatility has really widened. Again, think about how big of a move this is. 30 hours or so ago, the futures market had us at the SPY equivalent of 365, and now we're having this conversation at 383. I do think that we are now we went from oversold to overbought basically in 30 hours. I'm not buying up here at this point in time. If anything, I'm being a little bit more hands-off. I don't feel like I have an advantage right now because of that degree of extension that the market gave. But we'll see what happens. If we're able to continue to hold this 380, then the markets are looking bullish across the board, and it's back to business as usual. And that's as GameStop has come back down to, well, now it's at 116 again. It hit 75 at one point this morning. So it's just really interesting. I obviously, Michael here has a question. Do you have any videos on your strategies and the moving averages that I use? Yeah, so it's a great question. For any trader who joins the firm, either as a professional proprietary trader or as a retail trader, I have a training program that consists of a series of about 15 or so videos. Each one or so is about an hour. And if you have an account with us, I just give that to you for free. And it gets into detail on the specifics of how I use the 8 and 21 EMA, what they mean to me, how I approach risk management, how I approach game planning for reward maximization. My entire afternoon meeting yesterday was on the specifics of what I call putting yourself in win-win scenarios in the market. All I'm trying to do all day, if we go back to UVixie, which I spoke about, I'm buying here pre-market this day. I think my price was below the low of the day. The low of the day is 11.37. I think my price was more like 11 quarter. I still have some UVixie. I gave some of my stock back from this high here at 15.37 all the way to where it's trading here at 11.80. I gave back P&L in this, but I'm in a win-win situation. The worst case scenario, I'm going to get myself stopped out of this if it breaks below this low. If it breaks below 11.37, I'm going to get myself stopped out of UVixie because the market's back to bullishness, and I don't want to have this hedge on. It's just going to cost me money. By the way, UVixie is a garbage trading product. I just want to throw that out there. I highly recommend that people generally do not trade this. It's a leveraged VIX product, but it's subject to time decay, which means that it only goes down in the very long run. And then it does a lot of splits. Look at this. Split adjusted, it was at $50 million. It shows you that this is a garbage product, but what it also shows you is look at the coronavirus market crash, this thing, because it's leveraged, can go up very fast, very quickly. So if you have strong conviction, like I did, that the market was going to have a sell-off on that trading session, you can come in and buy this for shorter term trades and make pretty good money for yourself, catch a pretty good risk reward. But for the most part, this is a garbage product. It's not something you want to hold on to. But I put myself, this is what I emphasize to my team, this is what I emphasize to everybody. What a lot of people do in trading is they put themselves into lose-lose. You buy a stock, it goes down, and you don't have a game plan for how you're going to take a loss in the position. So you get into the hoping and praying game. I hope and I pray that my position goes back to my price. If it would just go back to my price so I don't have to take a loss, I promise I'll get out for break even. Please, God, help me get my position back. That's a lose-lose situation. You are either going to make nothing, or you're going to lose money, or you're going to lose a lot of money if that position keeps going against you. What I'm trying to do as a professional trader is put myself in win-win situations. So situation with my UVixy trade is just because it's what I'm talking about. I could talk about Airbnb also. I exited Airbnb last week. It's one of the best trades I've ever had in my career. And I also put myself in a win-win situation. When I'm buying it here and I get this move, I sell enough stock so that I'm going to make money no matter what. If this thing comes down to 11.37 and I get stopped out, I'm going to make money in this position. If it goes down another 50 or so cents, I'm going to exit my position as per my game plan, and I will have made money in it, even though it technically really didn't fully work, right? I caught a nice move here to above 15. I think it was almost 16. I was able to book profit in that, but I have a game plan built out for a move all the way to 20. And I'm probably not getting that move all the way to 20 is what it's looking like right now. But again, it's a win-win situation. I've booked enough in this where even if it goes all the way down to 11.37, I'm going to make money in it. If it goes all the way to 20 bucks, which is my target, I'm going to make a lot of money in it. And if it does something in the middle, then I'll make somewhere in the middle. But I am going to make money in the trade no matter what. And obviously, it's impossible to never have a losing position. Everyone takes losses. You know, when you first press that buy button and you buy the absolute top, which I promise you I've done many times in my career, you just bought that absolute top and the position goes against you, you're going to be taking a loss. You should be taking a loss. But what I really want to do every time I enter a position in order to maximize reward is how can I be game planned in such a way, game planning, that's a key word there, how can I be game planned in such a way where I'm putting myself in a win-win scenario. What do I got to do to get to the point where my worst case scenario is I lose nothing and my best case scenario is I make money and my best case scenario is I make a ton of money? That's what I want to be in. You know, again, everyone on my team knows I own my own trading. What do I mean by that? I'm wrong a lot. I am. And when I'm wrong, I admit it. I almost I almost prefer talking about the trades where I lose money more than the trades where I even make money, because we can all learn from how I take losses. But every once in a while, I got to talk about one where I made money. Airbnb being one of them. Airbnb had the IPO. Everyone's concerned about the valuation. I love the company. I've been living in Airbnbs all year. All year. All of 2020, I lived in Airbnbs. From the second we closed our Manhattan office at the end of February, all the way to the end of the year, I was in Airbnbs in different places throughout the country all year. It was a great experience. Love the company. Valuation and where they opened the IPO, a little bit of a concern. They sold it off the first 3 days, and then I put in this little doji candle here. The key on this day, and I was emphasizing it to my team in the morning meeting, I started buying more on this day, and I was adding in a bigger way on this day. The key here was they turned on options. And we'll talk again in a second. I'll talk real quick about Wall Street bets and GameStop and everything that's going on with that and kind of my opinion on it. But in this current market environment, and market environments change over time, in this current market environment, options trading has never been as prolific as it is right now for people in retail accounts. Options are a leveraged product. When people are in aggregate buying options, it juices the stock. Because what ends up happening, and you may have read, if you're following all this Wall Street Bet stuff about gamma and things of that nature, but basically what happens is there's a buyer and a seller in every transaction. If you buy a call option, which is a leveraged product, it could be a market maker that's selling it to you. Market makers are really not trying to take risk. They want to be immediately hedged. You buy a call option, the market maker sells it to you. The market maker then buys the underlying stock so that they're hedged, right? They sold you the option, but they own the underlying stock, and it's a leveraged product, so it creates a lot of buying. This right here, with a volume pickup, this is the day that Airbnb turned on its options. And I said, all right, I'm going to start getting the options buyers that come in. They're going to juice this thing after they sold it off for 4 days in a row here. And I was able to load up in this thing. I think my average price, I'm not 100% sure. I think my average price was about 132-ish on the stock. And I told the team on that day that I was creating a game plan for a move to 215 in Airbnb. That was my game plan. I want to move to 215. Now look, I did not hold, there's no way that I bought my full position at, let's just say it's 132 and then sold my entire position at 215. I would say that I'm not that good, but first of all, it's true, I'm not that good. It would be irresponsible for me to do that. Sure, I would have made a lot more money than I did on this trade, and it was one of the best trades I've ever had in my career if I held the entire position from 132 to 215. But that is not responsible trading. That's not putting me in a win-win scenario. Because at any point in time, if I don't sell any stock and this comes all the way down and I'm wrong, and everyone is wrong sometimes, then I'm going to still take a loss in this trade. Well, guess what? Once I book enough profit where my worst case scenario is 0, I'm in this win-win situation. And now I can be much greedier. I still was piecing out on the way up, and then I was adding back some stock into some of these pullbacks. But I followed the game plan that I created for myself. I'm sure guys that are in my VTF room, the pro desk, some of my own pro traders that I work with, when I said when this thing was in the 130s that I'm looking for a move to 215, that's what I'm game planned for, they probably thought I was nuts. But the whole thing is you don't know. You're in this win-win situation. It's moving in your favor. Create a game plan for yourself for reward maximization. And then in this case, it did exactly. Look, there's no way I could have known that the exact high was going to be 216. Again, I'm not that good. I wish I was. But it worked out perfectly to my game plan. I followed my game plan, and it was a trade that worked out really well. I'm doing the same thing, with MGI right now. MGI, I built into a position into it in here. One of the pro traders on my team is a former hedge fund manager. He's more of a fundamental guy. I describe myself as 85% technical, 15% fundamental. He probably describes himself as the opposite. 85% fundamental, 15% technical. By the way, he was pounding on the table on GameStop and Bed Bath & Beyond for months before those became hot topics. He's been pounding on the table on this MGI also. So I built into a position when I started to like the technicals. I know he likes the fundamentals. I respect him, but it's not enough for me. I need to like the technicals also. I'm a believer that the fundamentals tell you what to buy. The technicals tell you the when, the how to manage the risk, the how to manage the reward. And I have a game plan in place for this MGI to move to $17. And now I'm in a win-win scenario. My worst case scenario is that it comes back down below 650-ish, this area here. I'll get out of the position, I'll make money. My best case scenario is that this thing actually does go all the way to $17, which probably sounds insane here, in which case I'll make a lot of money. And the in-between case is that I'll make a decent amount of money. So again, win-win scenario. I'm either going to make money in this position or I'm going to make a lot of money in this position. That's how you need to think if you are trying to approach the market and make this your career. All right, let's talk about Wall Street bets. So first of all, let the people trade. All right, let the people trade. The SEC or whatever wants to come down on these people for doing the exact same things that the hedge funds have been doing behind closed doors for years and years and years. Let the people trade. Don't restrict their access to trading GameStop I understand, with that said, I do understand limiting people's ability to trade leveraged products if they don't really know what they're doing yet, right? You have that terribly unfortunate story, which, and honestly, almost, it makes me emotional to even talk about it, where you had that kid who was the Robinhood trader, and he took like some really big options losses, and then, unfortunately, he took his own life. And, suicide is something that's been close to me personally in my own life from an experience I had some years ago. So just a terrible, terrible situation. I do think that there is something to be said about not allowing people to trade products that are leveraged that they don't fully understand yet. But if you've got $100 and you want to choose to purchase an equity that is whatever stock you want, you should be able to choose to purchase that. And if you've got $100,000 and you want to be able to choose to purchase $100,000 of an equity, you should be able to do that. So I am totally against what's going on right now with some of the brokers limiting ability to trade and purchase the equities of some of these stocks, like your GameStop, your Bed Bath & Beyond, that COSS, ANC, etc. Now, look, GameStop is not worth $500 a share in my opinion. It's not worth $300 a share in my opinion. It's not worth $150 a share in my opinion. I think that legitimately GameStop is also not worth $12 or whatever it was. This company's had an amazing turnaround. They changed their management. They've become more focused on the online sales. They have their cash in a better position where they're not going to be going bankrupt, which is the big concern anymore. The stock probably, air quotes, belongs somewhere between $40 and $70. Went as low as about $75 today. Whereas AMC, honestly, I don't think this company is worth much at all. I think that this company is worth $2. I think it belongs back where it was. There's been no change on this. The only thing that's changed is that they've increased the float. They were able to raise some cash. But AMC has debt problems. They have no real value. Their business is basically closed right now. Maybe it could change over time, but with where things currently stand, I don't think that AMC is worth very much. Bed Bath & Beyond, I think the stock is cheap. Again, from a fundamental perspective at $26. This is another company, totally changed their management, totally got focused on online, which is the key, by the way. Back when Macy's reported earnings, they missed across the board on their last earnings report, but their e-commerce increased, and e-commerce is the key to success for these businesses right now. Let's get rid of a B. Look at Best Buy. There was a time when Best Buy was left for dead. A TV from Best Buy last week. And look what the stock's been able to do. So there are turnaround stories here. Not all of these, even though these stocks are trading together right now, they're very different companies that I think are worth different amounts. And I think in the long run, when this craziness is over, there will be some sort of return to where they, again, more or less belong. I have a position, again, for disclosure, I have a position in Bed Bath & Beyond right now. Back into this, there's support here in this $24 to $25 area that I like a lot. I want to see if I can get some sort of bounce off this thing. I was talking to my team. So every day, honestly, I've been telling my team not to trade GameStop. If you want to buy a couple hundred shares to go with the community, I'm all for it. I'm all for it. I secretly love that Melvin Capital got destroyed and that these guys had billions of dollars wiped out because a band of misfit toys got together on Reddit and made a bunch of memes and squeezed these institutions. It's their fault. Where was the risk management department at these firms? Why, again, a guy on my team who's a former fund guy and is much more fundamental than me was talking in December about the short float and the valuation of GameStop. I think he was all out by $28 because no one could have expected this thing was going to go to 500 and whatever. But yeah, I mean, I don't know. This is just completely nuts. I've been telling my team every day in this area not to trade it. I really don't like the risk reward. Again, I don't think the stock belongs at 350, which would make it a short technically. But the short flow was high enough that they could have squeezed it to $1,000 potentially if Robinhood and everybody else didn't start coming in and restricting trading access. This thing definitely could have squeezed significantly higher. But at some point, eventually, it is going to go back to the price approximately where it belongs. And again, if you want to own a couple hundred shares at a not great price because you want to be participating in the movement, go for it. It's your money. You should be able to do that. That shouldn't be restricted. But just recognize, you got technicals and you got fundamentals and you got where stocks are trading and where they should be trading. And what I like to do is have an understanding of where a stock should be trading, but also listen to the message of what the market's telling me on what it's actually doing. Because a lot of times those are two very different things. So I'm not in GameStop right now, though I did like the opportunity when it dipped below $100, and I was calling that out to my team. I do have a big position in this Bed Bath & Beyond, and I really like it in this area. AMC, my team shorted AMC yesterday. I was a wimp. I didn't want to pay for the borrow. The borrow was expensive, but a bunch of guys on my team were shorting this thing back through 16 off the open. I called it out. I was like, oh my God, I love this AMC as a short here in the beginning of the day through 16. Looked at the borrow. It was $6 or so per 100 shares on a $16 stock. So I decided not to pay for the borrow to actually short this thing, which was a mistake because it dropped, $10 from my call out basically by the next morning. But some of my team was able to do really well with that. So not all of these stocks are the same, and no matter what, you have to have an understanding of the risk that you're involved in. All right, now that we spoke about these GameStop stocks, let me just talk about T3 a little bit. Usually when I'm doing these webinars, I talk more about the prop trading side, and I will talk about the prop trading side, but I want to talk about retail trading with T3 for a minute, because the demand right now that I'm seeing coming into T3 on retail accounts is been off the scales. And you know what? It's for good reason. T3 has a dynamite retail offering for the active traders specifically. The software is Sterling Trader Pro. It's a professional software with direct market access. If people have been following my webinars for the last year, I regularly complain about what the quote-unquote free commission brokers are doing. There is no such thing as free trading. Been saying this for months, for years. There is no such thing as free. Look, T3 has accounts. T3 will make money off of you having an account with us. If you have an account with Schwab, you are making Schwab money. If you have an account with Fidelity, you're making Fidelity money. Right? I mean, I think that's pretty straightforward. But the way in which the commission-free brokers are making money and the way in which T3 makes money off their accounts are different. In my opinion, what they're doing is wrong, it's shady, and it's very expensive to you as an active trader. What they do is they sell your orders out to HFT firms. Why don't you pay a commission? The firm needs to make money, Schwab, whoever needs to make money, Robinhood needs to make money, but you're not paying a commission, right? If you're not paying money, it means that you are the product. Isn't that what the quote is? They sell your orders to HFT firms. Those HFT firms are then legally allowed to front run you in the market. You do not have true market access. This is the true market right here for the SPYs. It's 382.60 by 382.61 as we have this conversation. I can see the depth of market. I can see the inside bids. I can see the offers. When I choose to route my orders, I can choose what exchange I want to route to, what price I want to go to. So right now I'd be set to the ARCA exchange. I could go to BATS. I could go to EDGX. I could go to the New York Stock Exchange directly. I could go to NASDAQ directly, right? And I place my order into the market. right? Just placed my order into the market, and I know that it's sitting there, and I can be confident about that. That's direct market access. T3 for our retail accounts, we are one of the fewer direct market access brokers that still exist. We do not sell your orders to HFT firms. So what the HFT firms do is if you go to buy the SPYs right now and the Truant, see how fast it's moving also? If this is level 2. Level 1 is just this information up here. It's inside bid and inside offer. Sergio had a question if people aren't able to see it. If you're placing your order, a market order as an example, you should get the inside offer, a market buy. Right now it's 67, it's 68, it's moving, rapidly here, and right now the market's a little bit slower because it's lunchtime. In the beginning of the day, it moves very, very fast. What they do is if you route that order to them, they take that price and then they sell it back to you at a higher price. So you're losing a penny or two on your transactions. If you're an active trader, that's very... My estimation is that it costs you approximately $15 per 1,000 shares that you trade if you trade with a commission-free broker. But the thing is, you don't see that $15 as a fee in your account statement. It becomes a performance drag because you're just getting worse pricing on the... And that's the key. So everyone thinks, and I think this is so shady, everyone thinks that they're trading for free. So they're trading even more, when in actuality, it's probably more expensive to trade with those brokers now that it's free than before it was free. Because again, of what's happening with the selling of your order flow for payment. With us, it's very simple. Software for our retail accounts. You have direct market access, exactly like what I'm showing you here at the SPYs right now. You get the true market. The commission is 0.2 of a penny. It turns into $2 per 1,000. That's opposed to the estimate of $15 per 1,000 of a performance drag that you're getting by trading with a commission-free broker. And on top of that, if you have a retail account with us, I'll give you my training program classes for free, and I'll even give my virtual trading floor, the Pro Desk, where I'm running my daily morning meeting and running my daily afternoon meeting. I'll give you access to that for free as well. So, I mean, to me, it seems like a no-brainer. There is a monthly fee for the platform. The platform is $200 a month. If you're a very high-volume trader, I can get that discounted or even potentially waived. So that is the one downside, is that you do have that fixed fee, but it's because you're getting a very professional platform with direct market access at a very low commission cost. So that is our retail accounts. Hey, Jared, how you doing? Those are our retail accounts. I just wanted to talk, and the biggest thing, zero lag, zero downtime. Everyone's going down. Robinhood's going down, Schwab's going down, Fidelity's going down, E-Trade's going down. I see the news hit every day. I have people calling me complaining every day. We have had zero downtime, and we're not selling orders out to HFT firms. Reach out to me. You guys have my email address. It'll be at the end here if you want more information on it. T3 Trading Group, we also have professional proprietary trading accounts. The thing about the professional accounts, you basically get more capital access, but you also have to become licensed. So the licensing is you have to pass the SIE and the Series 57. We'll sponsor you for the exams. We'll provide you with study materials for those tests. You also have to pass a background check to become a professional trader. You cannot be like a convicted felon and become a professional trader. On the pro side, we have 3 different software options: Lightspeed, Sterling Trader Pro, and Wolverine. On the retail side, we only have the Sterling Trader Pro. It's an excellent platform. We have equities, options, futures. We've got options on futures. Any of that reaches out to me. Spoke about this a little bit last week. For me as a professional trader, I don't trade options because I don't need the natural leverage that comes in the product, because the firm already gives me as much capital as I could ever want. So my thought process has always been, why do I want to trade options, which suffer from time decay and are much less liquid, just for basically leverage access when I already have as much leverage as I could possibly ever want. If you're in a retail account, I think honestly options trading makes more sense, as long as you're sophisticated enough to really understand how the products work. But if you are a professional trader, you get as much capital access as you want. We usually start by giving people 20 times their account size for day trading and 8 times for their overnight. You're going to get access to a whole host of training and development, my training program, my virtual trading floor. We do a daily morning and afternoon meeting. Every afternoon meeting ends in a Q&A. This is what I was just talking about as a pro trader. You know, if you put $50,000 into an account, we're basically giving you $1 million in capital access to trade with. 400,000 for overnight positions, 8x for overnight positions. So that's the biggest advantage there of the pro accounts, is that capital access opens you up to different types of strategies that you would not necessarily be able to trade in a retail account. For me, for the way that I trade, I need that capital access. I have no interest in going back to a retail account. But again, you know, the pro accounts require licensing, and that can be a little bit of a headache to get through the tests. And if you're an experienced professional trader and you want to put, you know, $2 million into an account because you want access to $40 million, it's probably not a problem. You know, T3 is big. We're very well capitalized. So again, here's my email address. Reach out to me on those things. You know, again, if you have your account with us, you're going to get free access to my VTF room, Scott Ruther's VTF room, Ruther All Access, and my training program. Thousands of extra dollars of value thrown in there. And again, here's my email address. So again, reach out. Everyone's having problems. Our retail accounts do have to maintain a balance above the pattern day trading rule. So the minimum to open them is $30,000. You should be aware of that. But if you're an active trader and you are sick of having your orders front run and delayed, and you're sick of your platform going down, reach out to me. We have an excellent offering here. And if you want to become a professional trader, obviously reach out to me as well. It's my expertise. All right, everybody, I'm going to jump. Thank you. Hope everyone learned from this webinar. There's a lot going on. I know I'm really excited today, and I will look forward to next week. Have a great rest of your trading session, and make sure to manage your